Hey guys, this is Hamza. Welcome to the channel, and in today's video we're going to talk about how to survive the potential 2020 recession and what you guys need to know in order to come out on top post-recession. As you all know, we've had multiple recessions in the past, but the recession I would like to talk about is the most recent one that I'm aware of, which is the 2008 real estate crash crisis. Now in today's video, I want to talk about the opportunities and the lessons learned from 2008. And I'm going to talk about them today in this video and give you guys a better insight as to what you guys need to be doing moving forward. So as you all know, in 2008, we went through a massive real estate crisis due to the credit crunch. And what that caused is that caused a lot of real estate to come online and get heavily discounted. Now, I think since then, now in 2020, what we're seeing is that the government has learned from their mistakes, and there are stimulus packages and bailouts coming in for everybody. Although the PPP has run out as of today, I anticipate there will be a little bit more stimulus coming out. But let's get back to the topic. So I don't think that the banks are ready to take over all the real estate and go through all the foreclosure processes like they did in 2008. I don't think that is what the bank is looking at. I think the bank wants to work with landlords, which means more landlords are going to get to operate their businesses, operate their real estate. And what this means is that I don't anticipate crazy fire sales in a lot of asset classes. Now, I do anticipate retail to go down a little bit, and maybe light industrial with multi-tenant to take a little bit of a hit, but I don't anticipate crazy foreclosures, except for people, of course, who are very heavily levered. Now, that being said, we've had a great run. And what that means is there's a lot of people that entered the market over the past 2-3 years, extremely levered up, and those people are going to have a hard time making payments. Also, you need to realize and you need to remember that a lot of people aren't made to deal with the stresses of a recession, and they just want out. So these people may be approached and may be willing to sell their real estate at a little bit of a discount for you guys to be able to get in. Now, of course, going into a real estate, you need to have access to capital in order to buy. Now, that doesn't mean it has to be your own money. Remember, if you don't have the money but you have the opportunity, there's plenty of money out there parked somewhere that you need to find and get access to in order to start investing in real estate. Now is actually the perfect time to start calling people that you know that may have a little bit of equity lined up somewhere or stashed away somewhere for exactly these type of opportunities. You need to come up and focus with finding opportunities and the safest asset classes to invest in. With that being said, the safest asset class in my mind to invest in post-recession or during a recession in order to come out really on top would be, number one, in my opinion, is multifamily. As you all know, the hotel businesses are eating crap. There's a bunch of retail, suburban retail, heavy restaurants, heavy nail salons, heavy dry cleaners. All those businesses are kind of on a hold right now. So those are really attractive buys. So these are what I call multi-unit assets. So there's multiple tenants in one asset. Now, whether that's multifamily or retail. Now, on the multifamily side, I don't expect to see any fire sales, but I do expect to see a little bit of opportunity, hopefully with the guys who had that risky bridge debt and some heavily levered people who just want to get out at this point at any cost because they're going to get cash calls soon. And what cash call means is that because they're so heavily levered and their income is starting to go down, what they're going to need to survive is they're going to need to call on their investors for more capital, and nobody likes a cash call. Some people just like to get rid of the asset rather than have cash calls on or going towards investors. Now, with that being said, coming out of the recession, now is the best time to start looking. Now is the best time to find opportunity, to identify people who may be willing, number one, to invest, and number two, to sell you product. I think in the retail space, there is already product that has come live. I am looking at a couple of distressed properties in the retail space. I myself am not a retail investor, but I do know a couple of retail guys who are taking the opportunity and investing in retail right now, especially with the multi-tenant space. These people, of course, have different visions, different ideas than what I do, and they are very successful in their own right. That being said, real estate, if you look at the long trend of real estate over time, we are all within a few points of each other as far as cap rates go. Now, to get back on topic, I really want to focus on safer real estate investments. That would be my number one go-to right now post-recession or looking into a post-recession type scenario. In the meantime, what I'm doing is I'm also looking into the public markets. I don't have much exposure in the public markets right now, but there are opportunities right there in the REIT or the real estate space that seem to be trading at a discount just because the market is at a discount. And this is quite interesting because the real estate actually has not deflated in value, but in the public markets, what we're seeing is there is a little bit of a discount on the real estate just because it's priced in and connected to the broader S&P. And I can cover that in a separate video. That's a whole different topic on its own. But what I want you guys to understand is with recession, there is opportunity. With 2020, there is going to be opportunity. I'm already seeing opportunity being available to me, which means that there's a lot of people that are seeing opportunity being available to them. What you want to look at is you want to look at multi-tenant real estate. Please focus on the multi-tenant part. Do not go into single-tenant assets because those assets are definitely riskier at this point. And at this point, I feel like the opportunity is so large that the risk is just not worth it. So you need to look at multi-tenant opportunity, and that is what is going to get you through this recession and out on the other side with great appreciation, which means you're going to pocket, hopefully, you're going to get a 2x or 3x returns depending on the deal that you find. That's it for me, guys. I'm making this video short and sweet. I will see you guys next video.